right, well, let's also talk about the Dabur stock now, because that one reported its numbers. The numbers were largely in line with what the street was estimating. So the net sales were up almost about 10.7% to 2,060 crores, and the domestic business volume growth came in at 8.1% on a year-on-year basis. So good going for Dabur. The stock, however, is flat because it's seen a huge run-up. It's sitting at a 52-week high. So in fact, there's no profit taking. That just goes to show that even at such high valuations, the market likes this kind of a stock because of the good numbers. The gross margins improved about 320 basis points year-on-year to 53.7%, and there has been higher advertising spends that the company has incurred, so that went up about 60 basis points year-on-year. But good numbers coming in for the company. The margins at 15.3% were largely in line with estimates. So that's the word coming in from Dabur. Flat for now, but big mover. A couple of other big movers in trade include names like Syntex Industries, Allahabad Bank, a lot of tyre stocks like JK Tyres and Apollo Tyres also doing quite well. So volumes picking up on those names as well. Okay, before that, let's go across, in fact, to the management of Dabur, who's waiting by. Lalit Malik, the CFO of the company, joins us now to talk about that. Mr. Malik, good afternoon. Is my voice reaching you?
Good afternoon. Yeah, it's fine.
Okay, great. It was a steady quarter for you. Your volume growth this time around came in at 8.1%. How has demand been, and do you expect this kind of volume growth to sustain, or do you think demand has improved enough for you to start clocking in double-digit volumes as well?
Well, I think the quarter has been a little difficult in terms of the volume growth. However, we have been able to manage a steady pace at 8.1%. Having said that, I think if you look at going forward, we do see challenge on the top line as the sentiments are positive, but it's not reflecting in terms of the increased pace on the growth on the demand side. So therefore, we do expect kind of a steady level of growth, but not acceleration, and some pressure on the top line as we see going forward in quarter two.
Okay, Lalit, hi, good afternoon. So going forward in terms of your margins, what kind of levers do you have if you have to increase margins from here on, or is that not a top priority right now?
Well, I think as far as our margin growth of 300 basis points that we see are primarily on two accounts. Number one is last year in the same quarter there has been very high inflation, and coupled it with regard to the crude basis products, there has been deflation in this quarter. So we have seen an advantage in terms of increasing the margin, and of course it is also coupled by our synergies and efficiencies. Going forward, if we look at it, at least the inflationary impact in quarter two last year has started slowing down, and as far as the current quarter two is concerned, it will again depend on the growth of monsoon and on the economic parameters. So though we would be making attempt to maintain our margin, however it will depend upon the economic factors and also on the climatic conditions with regard to the inflationary impact on our margin for quarter two and going forward.
Okay, I just want to come back to that point you made about some pressure in the top line that you expect in quarter two. Where are you facing the heat? Is it in the rural demand, or is urban consumption slowing down?
Well, as far as our comparative from urban to rural is concerned, urban demand is growing ahead of the rural demand, primarily on account of modern trade and also on the institutional sales. At the same time, we also expect e-commerce also to pick up, though it will be comparatively small, but we do expect it to grow going forward. On the rural side, though we are maintaining a steady growth, but we have not seen an accelerated growth coming from the rural market. So going forward, we see a pressure coming from the rural market, and it will take some time, maybe in H2, when we will see the demand coming back. And as I said earlier, it will all depend on the economic factors and also on the climatic conditions, on the monsoon and other factors that will determine the demand to come back going forward.
Okay. What about ad spends, Lalit? What kind of ad spends you had this quarter, and going forward, what's the likely trajectory on that in terms of percentage of sales?
Sure. As far as the ad spend is concerned, we have increased as a percentage to sales ad spends in this quarter primarily in view of in new product launches that we did, and also getting the synergies with regard to our product expansion. Going forward, we would expect on again a steady pace the way we have been spending on the ad pro going forward, and it will depend on the new product launches that we'll be doing from time to time, and based on that we will continue to spend on the ad pro expenses.
Okay, you know, this 8.1% volume growth that you've clocked in this quarter, can you just break it up for us in terms of how much the international business has grown this time, and going forward for the second half of the year, will this 8% level sustain? Can you give us any kind of number on what we can work with for the rest of the year for Dabur's volume growth?
Sure. As far as India FMCG concerned, it has been 8.1%. If you look at on the overall scenario, it is around 7.9%, including the international market. So therefore, we see that international is slightly comparatively lower than the domestic market in India. Having said that, I think when we look at going forward, we should be looking somewhere within the band of 6 to 10% on an annualized basis. Although we do expect some pressure, as I said, on Q2, and we look H2 to be better, especially on account that this year the festival season of Diwali is going to be in Q3 as compared to what it was in Q2. So we are also going to compare ourselves with the higher Q2 base of last year. So we do expect some pressure in the short period of time, but annualized basis we may be within the range of 6 to 10%.
Okay, so some pressure in Q2, but 6 to 10% annualized volume growth is what you're working with. Will you see pressure only on the top line, or will your margins also slip below 15%? Because this time it's managed to stay in that 15% range because of, you know, falling crude prices, etc. But if you start to see pressure on the top line, then that may trickle into operational performance as well?
Yes, I think depending upon the top line growth, there will be impact on the margins. Having said that, we do expect to maintain our margins in view of the initiatives taken on the cost reductions and also in terms of efficiencies and synergies. So we will be in a position to maintain the margin. However, there will be pressure on the top line.
What about your international business? If you could tell us what happened in the last quarter, and you know, how you're likely to perform in the coming quarters?
Well, as far as the last quarter is concerned, there were few impact in some specific countries which has pulled our top line slightly down. They were primarily on account of MENA region, where there were political and economical disturbances. Also with regard to Nepal, although there were earthquakes, but we have been able to maintain our steady growth of more than 14%. There are some implications of exchange. There are few countries like Turkey, Nigeria and Egypt where we have seen a lot of devaluation on account of currency compared to the Indian translation. So that has pulled the top line down. However, on the local currency, we have seen in this market a very steady and a healthy growth. Looking forward, I think it will again depend on the stabilization of the political and economic scenarios in these markets with regard to the growth, and depending upon that, we should be able to improve our top line also.
Okay, just wanted to alert our viewers that the stock is now taking a bit of a tumble. Perhaps that's because the management is referring to the pressure that we can see in the second quarter, both in terms of sales as well as specifically in the rural markets. You were telling us about a slowdown in rural demand. Where are you seeing it in terms of a segmental performance between home care, health care and health supplements? You know, where are you seeing a slowdown?
Well, I think we would say that in view of the untimely rains, there was some pressure on the healthcare sector in this quarter. Having said that, considering the festival seasons to come in, just as I said earlier, it would move from Q2 to Q3. So we will see some movement from quarter over quarter with regard to different sectors. However, over the year's time, we would come back to the steady growth with regard to the top line.
Okay, would it be safe to say that your current margins may not be sustainable? A, because you know your ad spends may continue to go up, and B, because the benefit of raw material prices may not be a recurring event.
Well, I think I agree there may not be the similar material benefit going forward. Having said that, as I said earlier, we are working on a lot of cost-saving initiatives and synergies. So we are working towards maintaining our margin, though it will depend on the top-line growth also. But having said that, our efforts would be to maintain the margins going forward.
Okay. You gave us a figure in terms of rural demand, but in urban demand, what exactly is the expectation? The last time we spoke with you, you had indicated that a 15% growth in urban demand is something that you will continue to see. Would you hold on to that level, or has there been any slowdown there?
No, we are not at 15% in the urban demand also, because the difference between urban and rural is around 1 to 1.5%. Okay. So we are below 15% in urban. Having said that, our modern trade and institutions are growing more than 20%. So that is helping us to grow in the urban market faster than the rural.
Okay. Any acquisitions that you have planned over the next few quarters?
Well, we don't have any such proposal currently in our hand. Having said that, if there are some positive proposals that come our way, we are open to look at it. But we do not have any such proposal at present.
All right, we leave it at that. Thank you for joining us. And speaking about your numbers, by the way, the stock is now down almost 1%. Although the numbers were good this time around, as the management said, there is a slowdown underway in the rural market, and they expect some pressure in the revenues in the second quarter. And I think that, slightly cautious view from the management is why the stock is seeing a sell-off as well.